Hey guys, Mike here. So another big week ahead. We got some huge data coming out, CPI, which we're going to address in this video, and what to watch out for that, because there's a big difference between headline CPI and core CPI, right? And the Fed likes to look at core, also PPI. So we're going to go into that as well. But there's some other things we need to look at. One is look at where the banks are. This is going to be, to me, a week where we see if technicals actually hold up. Right? Because we know it's not fundamentals driving anything right now. It is technicals. It is absolute, looking for that next fix for the crack addict, which I was on talking about, like some kind of stimulus, some kind of liquidity in the market, something like that, right? And so when you look at banks, I know I've been getting a lot of questions about this. You can see right here, they are at critical levels, right? So if you look at the financial stocks right now, they are trading near the 2007 highs right there. You can see you got the bounce 2021. And then we're sitting right at it again. So we have two bounces off of it, coming down for a third bounce. So that is a critical level that it does not want to break. And of course, regionals are going to be the big ones, not the big daddies, but it's going to be the regionals that will make up this decision. And when you look at the KBW index, this holds a lot of big banks, small banks, stuff like that. You can see again, here it is at this critical level. Is it going to bounce, right? You got your bounce back in 2020. You got it bounce back in 2011. Now those are straight up bounce. It usually looks like it bounces and goes sideways, right? And then you have a nice recovery from that. But again, this is technicals we're talking about, okay? So we'll see if we get these bounces or at least start to stabilize. And we can see, Warren Buffett, who knows more about banks than anybody since he bought his first bank in 1969, you can see he had a shareholder meeting and he said, American banks could face more turbulence ahead, but depositors are safe. And that's kind of the key to look out for, and this kind of stuff, because they pretty much guaranteed almost all deposits. It seems that way. And then, of course, you got companies like SoFi, I read a few weeks ago, right? They on their own insure their deposits. They increase them from 250K to like 2 million, I believe, so the companies would stay with them, right? And even Warren Buffett in an interview this weekend said he banks at a regional bank and he definitely has over 250K in an account. You don't imagine how much that is. And he feels just fine about it. I think, obviously, he knows that's kind of the way this is going now, right? They're just going to say, hey, don't worry about it. We'll just make all deposits insured or something like that. And they're even trying to press the banks to pay more into the FDIC because they've had to pay out so much recently. And so they can maybe up the, and again, I haven't found anything that said they're going to absolutely do 250K or above, or all the businesses. I just heard that's what they're thinking about doing. If you got another source, let me know. Now, look at what yields are doing. This is always important. So what the bond market is trying to say here, and yields after that hot job report, unemployment dropping to 3.4, what happened? Everything went up. It was stunning to me. And look at what the 1 month is yielding. 5.482. 1 month. Like, can you imagine, where big money's sticking their money, right? If you have, $500,000 to $1 million sticking in there, that's a nice little, basically totally risk-free, right? Unless the government defaults or whatever, which, again, I always say this, if they're going to default, you got way bigger problems than that, okay? But look at that. That's what they can yield, and this is just one of those other alternatives. I'm going to touch on two more as we go through this video, right? Because remember, Tina's dead. We divorced her. Now there are other alternatives. Now, something else to watch. What I tell you, people are watching XLE, oil, things like that, to see where they think the economy is going. And you can see even Warren Buffett, man, he takes profits, right? He bought a ton of Chevron, and he's old, but $6 billion in the first quarter, and God knows how much he was up, But even the king of Omaha, whatever his nickname is, takes profits. And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it and all your support. And if you like this kind of content, think about subscribing. And I think what people are looking at, because obviously Warren Buffett believes in holding for years and years and years, right? Is like, is he just taking profits, or is he foreseeing something coming down the line, right? I think that's what people are thinking of, because he's a smart businessman, but that's what people always try to foresee. Like, okay, what did he do the move for? That's really the big question. And you've seen oil has been pretty weak right now, and so natural gas has been pretty weak. But it's because, and this is on top of the production cuts, right? You would think the oil would be through the roof because of all the production cuts, and the fact that the government has to refill their supply. But again, I've heard they're even draining it again this weekend. And so, again, that has to be bought back, but it's not. And so it's still showing weakness. So we'll keep a close eye on that. Now, with these charts, we're going to look at them a little bit differently than we did Friday, okay? Just take a different perspective. You got this widening formation here on the S&P. If you look at this, You can see it's bounced multiple times. It's bounced multiple times off the top as well. If it does head up, which most people think it will if we get some momentum, it just so happens the top of that range right there is around 4,200, right? That's a key level because that right there will break the February high, okay? And then if that is broken, of course, and we break out of this formation, then that puts the 43.25 area, which would be the August high, in range. Also, don't forget we found support sitting at that 50-day moving average as well, and so that's going to be sitting there, usually provide a nice little support. You can see it's bounced multiple times off of it, and that takes us to IW. I think to me this is like the most important one, right? Because this is the one that's not participating, okay? And it just can't get out of its own way. Small caps have been getting crushed. The SPY's outperforming it handily. It is at a key level, but understand this right here. This is what I'm talking about with technicals. And look where it usually bounces. This is IWN divided by SPY. So, the SPY obviously is handily outperforming it in 2023. But now we're at a key level you saw in 2020 where we got a bounce. Small cap started performing better. Then this goes all the way back. You can go all the way back to the .com bubble. And you can see where that level provided plenty of support for a bounce. So keep that in mind if small caps are going to make a comeback here. Now, here's some alternatives. Gold. Look at gold. Setting the supply zone going all the way back to 2011. It's rejected 3 times. We're in it again now. Struggling to move, but a lot of people are saying, hey, it's going to break out, right? Why? It's another alternative people are getting into, especially big money. TLT, right? Treasuries is another one I hear people like to get into. It's in this wedge, just keeps wedging down in this formation, bouncing off the top and bottom area, right? Got that volume profile to the right there, and that volume shelf, or if it can get above it, it can springboard up. Now, a lot of this will have to do with, does the Fed pause? What's going on with that and the Fed funds rate? But this is key, and again, it's another alternative people will be going into. So there's plenty of alternatives now for the market, which of course is why I always, have this question of like, how are we going to all-time highs or even getting close to it if all of a sudden all this money is flowing into different alternatives which weren't happening before? And let me know what you think about that in the comments. Now, Tesla, we'll look at this a different way. Obviously, broke that 165 area, gap above. But the question is, you can see right there in that wedge, are we going to come up and actually have a rejection off this and start heading back down? But truthfully, it looks bullish because guess what? Got that positive bullish MACD cross right there. And normally when this happens, you get a pretty nice move up on Tesla when this happens, okay? So, of course, a lot of us will have to do CPI data and how the market does that. Now, Meta, finding problem here is on the weekly. The 200 weekly moving average is where it's finding a problem. It rejected off of it last time. Right here, it finally made it above it, but you can see it's coming back down trying to get a bounce. So can it hold that 200 weekly moving average right there? So that's the key right there. If not, obviously, we're going to go down and fill that gap right there and then maybe head up from there. Now, going into earnings, a lot of earnings, a lot of high beta stuff, right? And these stocks have been doing pretty well, right? So PayPal is going to be a big one, sitting at a very interesting level, to say the least. Palantir, Devon Energy, Lucid, this whole McKesson, Suncor Energy, Hims or Hers, and so a lot of high beta there, right? Then we go into Tuesday, same thing. I didn't even know Nickel was still around. I'm just kidding, but that's a rough one there. Pfister, AMC Networks, and then of course Eve goes another one, Duke Energy, and a lot of people into that one. And then we'll have Airbnb. Let me know what you think about Airbnb because we're still traveling. There's no doubt about that, right? Rivian, Oxy, of course, is Warren Buffett's company right there. I don't know how much he owns now, but that's a lot. Affirm, Upstart, I did read where people are, actually taking advantage and actually doing a lot more when it comes to buy now, pay later programs. Win, the other stocks I think did pretty decent last week because we're still traveling, gambling, and everything else. Celsius is usually a big mover. Blink, of course. Then you'll have Roblox, which all the kids play. Wendy's, who is just charging way too much for their food. I went paying like $12 for a regular combo. I used to pay like $9 for less than, a year ago, but that's just crazy. Li Auto, because trust me, the food ain't got no better there. But then you got Walt Disney, which actually I'm expecting this to go down. We'll see. The Trade Desk uses as well. Unity, Marathon's another one. Robinhood, we'll see how they're doing. Check on their users. Then we're going to have JD.com, which has been really volatile. Fiverr, Yeti's another one. I think I own about 10 of those things. How about you? Those the drinking glasses and stuff. And then going into the economic calendar, guys, not really too busy of a week. Honestly, I think Monday, you're not going to see nothing really happening. Tuesday, another one, just kind of like, maybe NFIB Business Optimism Index. We'll see about that one. But Wednesday is the key, right? This is where you got the mortgage data. But more importantly, here comes the inflation rate month over month. forecast at 0.4%. Core inflation rate month over month, forecast 0.4%. Inflation rate year over year, expecting 5%. Look at core inflation rate year over year, 5.5. All right, so super sticky. And I'll show you what the headline's been, and you get to look at that. And then, of course, you have oil inventories, things like that. And then Thursday, of course, here comes the job data. Are we still in some kind of, what kind of numbers we're going to get? They seem to contrast one another. One to be hot, one seems like it's slowing down. Then you'll have something else the Fed likes to look at, and core PPI. This will be a big one. 3.3 is the forecast, prior 3.4. As you can see, this is what I started talking about, that time where you get where things are really sticky and they're not moving as much. And so we'll see how the market digests that one. And then Friday, not too much going on. Import, exports, but the big one would be, Michigan consumer sentiment. I don't expect any of this to move markets or anything. Now, looking at this right here, you can see this is headline, right? And so 6.4 to 6 to 5, big drop from February to March. Again, the Fed don't give a crap about headline. Good thing is, guess what? We were at 5 in March, right? Where is the Fed funds rate? 5.25, 5 to 5.25. So we were above headline CPI, but as I showed you, when it comes to core, we're actually not. Now, when you look at the forecast at 5.5, we're still not there, right? And remember, they're taking old data. We'll talk about that in just a minute. Now, you can see this is what I'm talking about. Underlying U.S. inflation seen as persistent in April. Core CPI seen rising 5.5%. And so, again, you can look at that chart from February, March, April. You look at August, October, November, December, it was dropping pretty nicely, right? Then all of a sudden, here we go. Stickiness is kicking in. But again, this has to do with the fact that one is they use old data, because most of it, like 40% of it, is housing and stuff, right? So, of course, instead of using the service, which I've been griping out forever, who does it for a living, they call people, how much is your house can rent for? Come on, really? And so that's a big problem. Two is also companies, right? As long as we're willing to buy it, they're going to keep raising prices. That's exactly what you hear on these earnings calls. That's just business, right? Do I like to hear that? No, of course not. I don't want to keep paying more. But again, people just keep spending and spending and spending, and they don't care. They don't seem to get the gist that as long as you keep spending and keep paying those prices, they're going to test the limits of how high they can raise these prices, right? And so, because you've seen, as far as their input costs, you've seen it. It's going down, right? But also now we're getting into this inflation part, the core part, where it's just sitting there stuck. And so that's something else we got to see. How is the market going to digest that, right? Because there's no way in the world, if it's truly, you never can really know if the numbers are true or not, but whether it's 5%, whether it's 4%, whether it's actually 8%, who knows? But that right there, the only reason I read a great report about this, the only reason that keeps going is the fact that I showed you that chart about how the lower income earners got the biggest boost, right? They were getting paid $8 to flip burgers. Now they're getting paid $13, $14, right? That's a big increase. And one thing I know about growing up super poor, my mom, God bless her, but she couldn't manage money to save her life. We always look paycheck to paycheck. And if a poor person or somebody who has lower income gets a raise, the last thing they would say is, let's put it back in savings. The majority of them say, let's go spend, baby. And they go spend. I can finally afford this pair of shoes. And they go out and get it. That's just the way it is. I don't mean to be mean. I grew up in this. Trust me, I know. I was in the military. And if you don't know, for those of you who complain about, and I've been meaning to show you a chart on this, who complain and gripe about how lower income people don't have to pay taxes, well, guess what you complain about? You complain about the military who protect your butt and your rights to be able to do what you want to do to earn more money, okay? Because I'm going to tell you something. As a private, any of you guys can back me up on this in the comments, who's a private, Lance Corporal, all that stuff, you don't make much money, okay? You don't make much money. And so if you want to complain about those people, you complain about the police officers who just got on the force, you complain about the military, that's what you complain about. So think about it a little differently, and also think about it like this. You got to have those people. Do you want to go back and do those jobs? Nope. But I bet when you go into a restaurant, you want somebody waiting on you, right? Yeah, when you go to a grocery store, you want to see vegetables and fruits and stuff. You think those people get paid a lot of money to go out there to those fields? No, they do not. You think they get paid a lot to go in these processing plants so you can have meat to cook at home? No. So that's the trade-off. They do the jobs we don't want to do, okay? We pay the taxes. That's just the way it works. That's kind of the way I think you think about it, because that's the way it is. This whole nonsense about everybody has to go to college. If everybody went to college, who's doing those jobs? That's my big question for you. But anyway, hope you guys got something out of this. Hit the like and subscribe button if you did. Let me know what you think about those earnings, your favorite earnings coming up this week, and if you're going to be playing it or not. And I'll see you guys tomorrow.